Most people think America became rich because of gold, factories, or Wall Street, but the real reason is much stranger. America became a financial superpower because of fear, panic, and economic disasters that forced the country to reinvent money again and again. In 1792, 24 stockbrokers gathered under a buttonwood tree on Wall Street in New York City. They signed a simple agreement to trade stocks and bonds with each other. Nobody there knew they were creating what would eventually become the New York Stock Exchange, the financial heart of the modern world. Back then, America was drowning in war debt after the Revolutionary War. The new government had almost no money, no stable currency, and no financial trust. Different states printed different paper money, and many people refused to accept it. Then came Alexander Hamilton. Hamilton believed the country needed a powerful banking system to survive. His plan was controversial. Many Americans feared banks because they reminded them of British control. But Hamilton pushed forward anyway and created the first Bank of the United States in 1791. It worked. For the first time, America had a more organized financial system. Trade increased, businesses expanded, investors gained confidence. But the story didn't stay peaceful for long. In 1837, America faced one of its first massive financial crashes. Banks collapsed overnight. Thousands of people lost everything. Unemployment exploded. Farmers couldn't pay debts. Panic spread across the country. And this wouldn't be the last time. Over the next century, America experienced repeated economic disasters, bank runs, stock crashes, and depressions that terrified ordinary citizens. Then came the Panic of 1907. People rushed into banks trying to withdraw all their money at once. Many banks simply ran out of cash. Financial chaos spread rapidly across New York City.
At that moment, one man stepped in, J.P. Morgan. Morgan locked bankers inside his library and forced them to create emergency rescue plans to stop the collapse of the financial system. Imagine that, one private banker saving the entire economy because America still had no central bank. That crisis scared politicians badly. So in 1913, the government created the Federal Reserve System, known today as the Fed. Its mission was simple: prevent financial panic from destroying the economy again. But even the Fed couldn't stop what happened next. In 1929, the stock market crashed. People had borrowed huge amounts of money to buy stocks, believing prices would rise forever. When the market collapsed, fortunes disappeared instantly. Banks failed, businesses shut down, millions lost jobs. This became the Great Depression. Some families survived by growing food in their backyards. Others sold furniture just to buy bread. Many Americans stopped trusting banks completely. Then, President Franklin D. Roosevelt made one of the boldest financial moves in history. In 1933, he temporarily closed every bank in America. People panicked, but Roosevelt reopened only the strongest banks and created federal deposit insurance so citizens wouldn't lose their savings if banks failed again. That single decision slowly restored trust in the financial system. After World War II, America entered an economic boom unlike anything the world had ever seen. Factories expanded, suburbs grew, and millions of families entered the middle class. Then, something historic happened in 1971. President Richard Nixon ended the direct link between the US dollar and gold. Before that moment, foreign governments could exchange US dollars for actual gold reserves, but Nixon stopped it completely. The world was shocked. For the first time, the dollar became a pure fiat currency, money backed mainly by government trust instead of physical gold. Many feared disaster. Instead, the dollar became even more powerful. Global trade exploded. Wall Street expanded rapidly. America's financial influence reached nearly every country on Earth. But modern finance also created new dangers. In 2008, another massive crisis hit. Banks had created risky mortgage investments tied to housing prices. When the housing market collapsed, giant financial institutions nearly failed overnight. People lost homes, savings, and retirement accounts. Fear returned once again. And just like previous generations, America responded by rewriting financial rules, rescuing banks, and rebuilding confidence. That's the hidden pattern of American financial history. Almost every major financial innovation in the United States came after fear, panic, or collapse. The stock exchange came after war debt. The Federal Reserve came after banking panic.
Deposit insurance came after the Great Depression. Modern financial regulations came after the 2008 crash. America's financial system wasn't built during calm times. It was built during chaos. And that may be the biggest financial lesson in American history. Every economic disaster forced America to reinvent the future of money.